Hey, everybody, welcome back. I have with me today one of your favorite guests and mine, Tami Wollensak. She is a divorce mortgage specialist. So, we are talking about all things. What the hell do you do with the house? Can you assume the mortgage? Things have changed since the last time Tami was on. So, we wanted to bring a little bit of a refresher to this conversation. So, Tami, thank you so much for being here.
Oh my goodness. Thank you so much, Kate. Your platform does so much for so many people, and I'm so grateful to be here. And
Well,
have this conversation. It's so timely.
it really is because I hear from my clients all the time. We always are talking about, what to do with the house. Can I keep the house? Should I keep the house? What is the biggest misconception when somebody says, like, well, I want to keep the house? Let's say a stay-at-home mom has been in the house, the kids raising the kids in the house, they want to keep their children in the home, right? This is like one of the most common
Yeah,
scenarios.
totally.
Um, um, what is one of the biggest misconceptions about that?
Well, it's interesting that you say that because I just got off a call with a client earlier today, and she was at that exact same scenario.
Mhm.
Stay-at-home mom, can I keep the house? Spouse is telling her, you can't. You're not on the mortgage. Okay, so that's the first thing
Okay.
is we're not going to take information from our spouses. We're going to get clear guidance on what that means. And the first thing is if you've lived in the house during your marriage, doesn't matter if you're on the mortgage or not, it's a marital asset,
If it was
right?
purchased
If it was purchased,
in the marriage.
sometimes part of the equity that was purchased if it was purchased prior to the marriage can be considered non-marital
Hmm.
if one of the people bought the house prior to the marriage.
Yeah.
But for the majority, let's say you bought the house together and for whatever reason, sometimes in lending, you're not on the mortgage for some reason. That happens often,
Right.
right? And
Yes.
so people think if I'm not on the mortgage, I don't own the house. Well, that is not the case. More than likely, if you were married when you purchased, you're on the deed of the house or the title of the house. That is ownership interest. And even then, if for some reason you weren't put on the title, maybe you bought the house, during your engagement or something like that, and you weren't put on the house, there are other things to consider and depending on your state law and stuff like that. But more than likely, it's a marital asset. And what you're negotiating, and I tell people all this time, is not the house.
Mhm.
They think I'm negotiating the house itself. You're negotiating the equity in the house. And I'm going to explain that really simply because a lot of times this is a foreign concept for people. But what we're going to do is we're going to come up with the value of the home, what the home is worth today, what you think it's worth. We're just, right now we're just in discovery phase. So what do we think the house is worth? Okay, the house is worth 500,000. And I know that we probably own, even if I'm not on the mortgage and I've never seen a mortgage statement, but we probably owe around 200 or let's call it 300,000 to make easy math. 500,000 is the value, 300,000 is the balance on the mortgage. So what I'm negotiating when I'm going through my divorce is $200,000, the difference. That's the equity.
Mhm.
That is the marital asset. And the answer to the question is usually you have to do two things in a divorce process. You have to release liability because the person that's leaving the house doesn't want to be responsible for the mortgage, right? Forever.
Right.
Sometimes there's cases where you are responsible for the mortgage for a certain period of time or whatever's right for you and your family. But two things typically need to happen. They have to be released from the mortgage and they get to get their portion of the equity.
Hmm. Right.
Okay.
Right.
So that's, really what we have to run numbers and see how that looks. What we can do to come up with that piece of equity to pay out the equity. Can it be exchanged with other assets that you've accumulated over your marriage, right? it's not in a silo. You're not just looking at the house, you're
Right.
looking at your entire, they call it a marital balance sheet. I always tell clients it's like a bucket of assets. Let's just think about it like a
Right.
bucket,
Right.
right?
Yeah,
Everything
exactly.
you've
Everything's in the bucket
accumulated.
and how you divide it's got to be divided equally, but that doesn't mean that $100,000 has to come out from the house. Like
Right.
it could come from your retirement.
Could. Yep.
Yeah.
Could
Hmm.
come. I've had people where it came from a parent.
Uh-huh. Right.
Right? Like a parent has helped and paid out the equity so that the
Hmm.
person staying in the house didn't have to. We could do a whole new mortgage sometimes, but that needs to be looked at. We need to see what is that new payment going to look like.
Right.
Well,
And this is where it's like, right, if you want to keep the house,
yeah.
you will probably have to, as we've talked about before, qualify for a new mortgage.
Mm-hmm.
Which if you've been a stay-at-home parent may not be possible because
May
you
not
don't
be
have
feasible.
provable
Right.
income.
Mm-hmm.
And um, you have to qualify for the new mortgage. So then do a refinance in order to
Correct.
get your spouse off the mortgage and put it only in your name. Make sure you can actually qualify for that at today's mortgage rates.
Yes.
And that's where people get, oh,
Tied up,
yeah.
really twisted up. So they think, well, how can I just keep the mortgage we have? We bought our house in 2020 and we have the best interest rate ever.
Hmm.
Everybody thinks their interest rate is the lowest interest rate that existed. And I say, well, surprise, unless you lived under a rock, most people have a great interest rate on their mortgage during 2020, during that pandemic, during those times. Rates were unprecedentedly low. Is that a word, unprecedented?
Yep.
They were the lowest we've seen in a very in decades, right?
Mhm.
So most people refinanced or purchased during that time. So, how do they keep that rate? So, that's what we wanted to talk about today because there's a word out there that's getting thrown around a lot and used, and it's called mortgage assumption.
Yes.
And a mortgage assumption, what that means is there's a way some lenders allow it, and not all lenders allow for you to keep that mortgage rate. Sometimes you have to have been on the mortgage because it's considered a release of liability. So, two people on a mortgage are releasing one person from the liability of it. If
Hmm.
you're not on the mortgage, sometimes they don't allow you to flip flop and assume your spouse's mortgage. So, that is a really important question to ask.
Now, the last time I'm just want to, sorry to interrupt,
Yeah.
but
No,
the
yeah,
last
good.
time you were here, we did talk about assumptions.
Mm-hmm.
And there was something about how if I remember correctly, a lot of times lenders would say, no, the mortgage is unassumable. But then actually, if you dig a little bit deeper,
Mm-hmm.
it actually was assumable.
That's a great point because
What was
you're
the deal with
right.
that?
So people aren't talking to the right people when
Mm.
they're asking the questions. They're calling their loan officer that did the loan last time. Most loan officers are not trained in divorce. I am trained in divorce. That's why I understand this stuff. But if you just call your bank or you call your loan officer, they're not going to know. Most conventional loans, which a lot of people have,
Hmm.
are not assumable. You can pull out your loan documents today from when you close, and it'll clearly say right there on the document, not assumable.
Yeah.
But because of the divorce, because you're going through a divorce, a lot of times a conventional loan can be assumable because of the process of the divorce.
Ah.
So that is the main thing. You can't just call
It's
your
like a
service.
change in circumstances. It's like
Yes.
I
Yes.
can't apply for health insurance. I can only apply during the window of open enrollment unless there are special circumstances.
100%
Ah,
correct. It's a
gotcha.
special circumstance.
Gotcha,
So when
gotcha,
you
gotcha.
call your servicer, and when I say servicer, I'm talking about pull out your mortgage statement, and at the very top of the statement or at the bottom, it's going to say for mortgage servicing questions, call, right? There's always a number.
Okay. Mortgage
And you're
servicing.
do
Okay.
mortgage servicing, and you're going to call the servicing department
Okay.
and you're going to say, I'm going through a divorce. Is my loan assumable? You have to use those words.
Ah, gotcha. So,
Those are the
okay.
important magic words because if you just say, is my loan assumable? They're going to say, no, it's not.
Gotcha.
Right.
Gotcha.
So make sure you let them know. People are afraid, they think, oh my gosh, if I tell them I'm going through a divorce, is that going to be a bad thing? No, it's not going to be a bad thing. They need to know what you're talking about.
They can't take
And
action against you.
no, they can't take any action against you. There's no,
It's not illegal
it's not
yet.
illegal. No. Um, and here's the other thing. So then they'll be able to they'll look up your loan and they'll say, yeah, your loan is assumable or no, yes or no. But either way, you're ahead of the curve
Yeah.
by either eliminating that option or being able to ask more questions,
Mm-hmm.
right?
Mm-hmm.
And the more questions are going to be this because a mortgage company is not going to allow you to even apply for a mortgage assumption until your divorce is final.
Mm-hmm.
Why is that? Well, the reason is because when you're going through a divorce, you're dividing everything. You may be receiving support, but also may be liable for support, right?
Right.
You
Right.
may have to pay support. You're dividing your assets and you're also dividing your liabilities. Maybe there's a car payment that's in your spouse's name that you're going to be now be liable for because you're going to get the car, right?
Right. So there's a little bit of chicken and egging happening here because if they say yes, it's assumable,
Yep.
but you can't apply to assume it, you still have to apply
Yes.
until after the divorce is final. And in our final decree, everything is divided around the fact that the
I'm going to
assumption
assume
that I'm
it.
going to keep the house, that I'm going to be able to
Yeah,
assume the mortgage. But then what if I can't?
exactly. What if you can't?
What if at the when it's all said and done, like can they say like this is the likelihood that you will be like what
They
do I
won't.
need
Most of
to be
them will
able to
not. They
apply?
won't even go down the process. So, do you need a backup plan? 100% you need a backup plan.
Yeah.
You need to be comfortable with the fact that if that assumption doesn't go through, you always want to write in your settlement agreement what the backup plan is. I'm either going to assume the mortgage or I'm going to refinance the mortgage.
Okay.
And this is going to be the timeline. And if that doesn't happen, and if I can't do either, what's the runway of time? What's the agreement going to be? Are you going to be able to remain on the mortgage for a certain period of time? I've seen settlement agreements that say you're either going to assume the mortgage or sell.
Right. Yes, exactly. And there's a
There's a
time.
very smart, okay, well, let's talk about timeline. Most of these mortgage companies, and Kate, this is like probably just like a little fantasy that I have, but I think of like one guy sitting in the corner processing mortgage assumptions, and he's not compensated really to do it. He's in a dark room, and he's like, this one fell off the tracks. Not going to happen just because so many people are trying to do this and they don't really staff for it. And
Oh,
so these large institutions like Chase or some of these big banks,
yeah.
they take 6 to 8, they'll tell people right up, if you're getting the packet of information, it'll be 6 to 8 months. 6 to 8 months to process it.
To
Well, to process it, the assumptions. So, what if your spouse is not going to agree to stay on the loan for 6 to 8 months, right?
right.
Well, you're in trouble because you agreed that you were going to do this in 90 days. It's written in your settlement that you're going to do it in 90 days. Chase could care less that you made that agreement.
Oh, right. That's not. it wasn't made with them. They don't give a shit.
Right.
They're like,
They have
that's
no
nice.
skin in the game. They could care less that you have to sell because they're not, processing it fast enough. So you need to know what the
Huh.
timeline is. So the second question is, yes, my loan is assumable. Okay, great. What's the timeline? Okay, it takes 6 to 8 months. 6 to 8 months, give yourself a year,
Right.
right? So can I have a year to stay for you to stay on the mortgage while I get this process? And then second thing is, what does it cost? This is not free.
It's not a free service.
No. And in a refinance, when people refi their mortgages, we roll all the costs into the loan. So most people don't write checks when they
Oh,
refinance mortgages.
okay.
They just go to the closing, sign the paperwork, and all the fees and stuff are included in the new loan.
Okay.
This is not that
Yes.
because all you're doing in our example earlier where you owed 300,000, that's all you're keeping, 300,000, right? That's what the mortgage is going to be. It's going to be
Yeah.
that when you assume it.
Yeah.
So any closing costs or fees or stuff like that, you're going to have to write a check for them.
Right, because the assumption, I just want to clarify for people who might be like,
Yeah.
what's the difference, right? Is that
Yeah.
when you are, um, if you are taking your spouse off the mortgage and you're refinancing,
Hmm.
essentially you are applying for and obtaining a brand new
Brand
loan
new loan.
at a brand new rate based on the value of the home
The
today,
new value,
the new
right?
value.
Correct.
When you are assuming a mortgage, you are taking on the mortgage that already exists at the rate that it has existed at for all
Correct.
this time,
Yep.
right? So, yeah, so those fees are not rolled in, they're actually on top of, they're part of.
Correct. So they're going
Yes.
to ask you, you're going to reclose the loan. Most of the time, because you're going to have new paperwork that you're going to have to sign saying you're fully responsible for the mortgage now. Your spouse is going to sign what's typically in most states called a quitclaim deed. And what
Hmm.
that deed does is it removes them from having ownership interest of the house.
Yep.
You've assumed the mortgage, so they're no longer liable on the mortgage, and now you own the house outright. It's your house. You could
Hmm.
do whatever you want with it. You could, keep it, sell it, do whatever. You don't have to ask their permission any longer to do anything.
Hmm.
So that's what you're doing when you're assuming the mortgage. So those fees and stuff that come along with closing a loan, title fees, and now they're not going to get a new appraisal. They're going to go off of the value of the home when you place the loan,
Hmm. Right.
right? So here's another thing that comes up all the time and is really important for people to understand. They think they can go get a home equity loan or, home equity line of credit to pay their spouse for the equity, that $100,000 that we talked about. Some people
Right.
say, well, I'll just get a HELOC or I'll get a second mortgage and pay them their money. Sometimes if you owe 300, you place $100,000 loan as a second mortgage, that's what it goes in, second lien position, that can make the assumption deniable.
Mm.
And here's the reason why, because they're not getting a new appraisal. They don't know that the house is now worth 500. Maybe you bought the house at 400, but
Right.
it's now worth 500, right?
Right.
So when the lender is looking at this, they're going off the value when you placed the loan for the 300 and it was
Yep.
400 then. So
Right.
now you have a $300,000 mortgage and you have a $100,000 mortgage. You're
They
at
don't
the
have any
full
equity.
value. You have no equity
Right.
according to them.
According to them. Right. And if you
Mhm.
refied, maybe you would, but
Yes,
yeah.
right.
Yeah.
Because we
Very
would get a new appraisal if you're refinancing, we would go off current value.
right.
Right.
Right. And so, I mean, this becomes, it feels like, again, like there's a lot of chicken and egging happening. So
A
you want
lot
to
of
make sure you know the
complexity.
timeline, the fees
Hmm.
now, and you want to negotiate, right? If you're keeping the house, maybe it makes sense that these are your fees, right? Because
Yeah.
it's part of the investment in the thing that
Hmm.
you're keeping.
Yeah.
But you also, before you start like fighting for these things, you need to know what's possible.
Yeah.
Because if the assumption is theoretically possible, is it actually a possible for you? Right?
Right. Is it feasible? Are
Mhm.
you actually going to be able to make a mortgage payment on your own with your own income without having a second income, right, of a spouse or whatever?
Right.
Everything is on you now, utilities, maintenance, everything, not just that mortgage payment. That's the biggest factor that I like to drive home to people is, does this make sense for your budget?
Right.
You may be able to do the process, right? Now you've done the whole process and now you've assumed the mortgage. Now I own the house. Now, what does this do for my budget?
Tammy, so I'm hearing already in the ether all these voices of women being like, okay, but if I can't, right? And if it doesn't, then what? Because the
Mhm.
market, the way it is, like I can't afford to move either.
Yeah. Well, people need to take a step back and really understand that sometimes you're not going to go from home ownership to home ownership. Sometimes you're going to have to go from home ownership to a rental.
Mhm.
And there's no shame at all in that. And there's sometimes it gives you the breathing room to reestablish yourself and reestablish what a budget needs to be for you.
Right.
Renting has a lot of benefits, such as if something breaks, you call your landlord. They come and they fix it. You
That's
know what
right.
your budget is. If your rent is 3,000 a month, that's what it is, 3,000 a month.
That's it.
You know, it's not 3,000 plus the heater just went out. It's what it is. And
That's right.
so I think if it comes down to that and people are trying to come up with options, that's a very viable option. And yes, you may not be able to buy a similar home than what you were in. And I think people are very unrealistic with their lifestyle post-divorce,
Yeah.
unfortunately,
Yeah.
right? Sometimes you're not going to be able to live in the same neighborhood. You're not going to be able to live the same, be able to do the same things that you did being married. It's just a fact.
It is just a fact, and I want to say very clearly, right, that, and I've said this many times on the podcast, and I want to say it again, right, is that a lot of us we are um, connected, deeply emotionally connected to our homes for a
Yes.
variety of
Safety.
reasons, of course.
Safety. Yeah.
But also because we think that our children, it's best for our children, right? It gives them minimal disruption, all of those things, which makes sense.
Mm-hmm.
And I've said this a million times. Wherever you are is home to your children. The building
100%.
doesn't matter.
Mm-hmm.
Um, that I mean I hate to use like children are resilient and they adjust. Like I hate that because like I, I feel like it's a little dismissive of the experience that children go through. But also it's true that they do adjust. They just need you, right? And
I think
so
they translate it the transition the way that you project it to them.
yes.
And I think we've talked about this
Yep.
on our previous talks together
Yeah.
about, if you let them know that you're still going to be there for them, that you're going to still support them, you're still going to love them, that you're going to do everything in your power to make sure that they can still go see their friends and do the things that are important to them, their
Mhm.
activities, and
That's
their
right.
want to know their life, what is my new life going to look like?
Hmm.
And if you
Absolutely.
leave a lot of unknowns, they're going to feel a lot of fear.
Absolutely. And if it is clear to them or as clear as possible, if you can
Yeah.
answer as many questions concretely as you can, um, I'll remember when I got divorced. And by the way, I will also repeat, I've said a million times, but when I got divorced, I moved out of the house. I wanted to keep it. I was so
Sure.
emotionally attached to that house. I'm still emotionally attached to that house. I've been divorced for like 17 years.
Yeah, I
And
know.
whenever I drive by that house, my heart is still like, ugh. Now, if I lived there, I'd hate it because it was fucking tiny
Oh,
and it had
really?
no closets.
Mine
But
was opposite. Mine was really big, and it's such a relief when I drive by it. I'm like,
like,
oh, thank
oh
God, it's
God, thank
so
God it's
big,
not
like
mine.
too way too much. Like it just feels like a giant weight.
Right, right. Well, I was not going to be able to afford it. I was certainly not going to qualify for a mortgage for it. All of the things, right? And um I forgot where I was going with this. Damn it. Oh, um but and I did. I moved into a rental that I was in until August of this year. So in that house
Hmm.
for over 16 years. Um And when I moved into it, it was on the quote wrong side of the tracks kind of thing. The house had like horrible peeling paint, like the exterior was all just like crumbling off. It had astroturf on the front porch. It was like, but inside it was like a beautiful California craftsman home,
Oh, wow.
right? And it was 3 bedrooms and a huge backyard.
Hmm.
And it was affordable because it was, on the south
On the
side of
wrong
the
side of
main
the track.
drag. Well, I mean, by the time I moved, that house was worth well over $1 million.
Crazy.
They had, of course, painted it, painted the
Yeah.
exterior at some point, probably 5 years after I moved in. And it ended up being like just this beautiful, and I made it what it was,
Yeah.
right? Um, and I remember a friend saying to me too when I was considering this, I was like, but his dad's going to have a big house and then I'm going to live in the shitty house. And he was like, look, when my parents got divorced, my mom had to move into an apartment building and we had lived in a very beautiful, nice house. And my mom had to move to an apartment. But it had a pool. And he's
Yeah.
like, it didn't matter that we were in an apartment versus a house. He's like, what I just remember is that like each place had something special. Each place had
Yeah.
something that we loved. And that really stuck with me. That like even
Yeah.
though it was a teeny tiny, like maybe 2 bedroom apartment, it had a pool. You
Hmm.
know? And my
Yeah.
my house did not have a pool or anything like that. But what it had was me and all of the memories that we built there over
Hmm.
time.
Holidays and all the fun birthday parties and all the
All of
amazing
it.
events and stuff
All of the
that you
memories.
you
That's right.
create that special warmth and safety for your kids, and it doesn't, the four walls really don't matter. It's
No.
hard for people to visualize when they're going in the ick of
Yeah.
it, in the thick of it. But it really is true. And if you feel less stressed by your financial situation and you're not wondering how you're going to make that payment and how you're going to have ends meet, and you're not having to tell your kids every day no
Yeah.
because
Right.
you can't afford it,
Yep. Yep.
it's going to make your life a lot easier too. So,
That's right. That's right. And, the other thing about rentals everyone says is like, well, it's not mine, so I'm not going to do anything to it. And I say, you know what? Like, as much as you can, do everything to it. You live there.
yeah.
It's your house, right? Now, certain things, obviously, you're not
Yeah,
going to
you're
do
not going to like
structural. You're
rip,
not going to
like
like,
add a broom to it or something.
no, right? But like I painted during the
Of
pandemic
course.
especially, I painted every room, lots of bright, vibrant, fun colors. The money that I might have had to have paid for, repairs or whatever, if I had owned a home, went into creating a space that I loved and was comfortable in. And to Tammy's point, when I got severe mold poisoning from my house,
Mm,
it was a phone call to my
mm,
landlord, and it was $10,000 on their dime, not mine, to
absolutely.
find it and remediate it.
Yeah. There is nothing worse than being in a house, because I know this from I did downsize and then I ended up, doing a lot of repairs and stuff. But then when you go down into your basement or something and you own a house and you see water or you see like you have a plumbing issue or something and you have to make a phone call and they tell you, oh, that's going to be $1,000, ma'am, blah, blah,
Yeah.
blah. And you just want to shoot somebody.
Right. Absolutely. Right. Oh, the sewer line is, completely
Yeah,
blocked
she's
with
backed up and we're gonna have to bring out
that's
a
12
truck
grand,
and
ma'am. Like, that's not my 12 grand when I'm a renter. So, all this to say,
yeah,
um, homeownership is not everything.
no.
It really isn't.
Mm.
And, there's a whole sort of swath of, I don't know, people out there saying, renting is flushing money down the toilet every month. There's no investment in that. If the investment is in your like peace of mind, if the investment is in, even if it's a stopgap, like you don't have to be in a rental forever, right?
Exactly. This is not like a lifetime decision,
Yeah, right.
right? This is
Right.
like getting your feet, a life transition,
Yes.
like a divorce, which is a major life transition.
Right.
Sometimes you just need to stop and breathe. And sometimes renting and not rushing into the next purchase and all that kind of stuff. Like, what if you buy in the wrong area because you didn't have to feel like you had time to research it or look into it or whatever.
Well, what if you
It's
just buy like you're not like giving there's not a lot of time for you to go and
right.
look and check out neighborhoods and check this out and that out. If you're like, I have to buy something that is on the market in
Right
the next
away. As soon
month.
as I have to move out of this house, I gotta buy something so I can move in. I
Yeah.
get people all the time in that position where they're just like in a panic because their divorce is going to be final. In their settlement, it says they have to move out 60 days post judgment. Da, da, da. And they're like, oh my God, there's no inventory. It's the middle of winter. Da, da, da,
Yeah, yeah,
am I
right?
pre-approved? You have to stop and breathe. That's why we do a lot of planning. We do a lot of planning and contemplation stage. We sit back and we look at what all the options are. A more informed person can make better, clear decisions.
A
And the more
hundred percent.
information you have, the better. And when you look at all of these, okay, what does an assumption mean for me? If I assume my mortgage, I'm going to give up $100,000 of some asset. Okay, maybe I'm in my 50s.
Yep,
Do I want to give up $100,000 of retirement? Maybe not, because maybe that and retirement is important to you,
that's right.
right? So we have to look at everything. It can't be just like a blanket answer.
Right. Absolutely. And also $100,000 of retirement money is not the same as $100,000
Great
of
point.
a
Yes,
mortgage, right?
absolutely.
That
Mhm.
there
You
are
don't want to
tax
make that deal.
implications that are different. There are, right, the dollar amount is not always the same. And
100%.
yeah. Um, so when you're thinking about this, right, you want to build in these things, and I love that you brought up the contemplation stage, right? That's when you should be looking at this. You should be
Hmm.
looking at, you should be calling Tammy now
Yeah. I did.
because, yeah,
It's
because
never, there's never a too early. I talk to
yes,
people when they haven't even told their spouses yet. Is that wrong? No, it's
no,
not. You
not at
need
all.
to get all the information. You need to, think about it as long as you need to think about it. What does this mean for me? Right?
That's
What does
right.
this,
That's
what are
right.
my options? So that it can help you not only make some better informed decisions for yourself, but it can also make a smoother divorce process, right? If you have all the information and you're not just relying on somebody to make your future decisions for you, it's
Right.
going to cost you a lot less money.
Yes. And one caveat here is that you're not going to, when you have the divorce conversation and your spouse is like, well, then who's going to keep the house? And blah, 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 blah.
Yeah.
You're not going to say, well, I've been speaking with this,
Right.
divorce mortgage specialist,
Yeah.
and she said, because then
Yeah.
like, they,
They're going to have,
you don't need them to know how long you've been planning and talking
mm-mm,
about this, right?
no.
That's not going to
You
make things
just,
go smoothly.
I
Right.
would say you would say something like, well, we're going to find all of the information out together.
That's right. We have a lot of decisions to make. Today is not the day to
Hmm.
make those decisions. Right now, we're
Yeah.
just talking about X, right?
Yeah.
But yeah, I can just imagine a lot, I've heard many of these stories of people being like, well, and then I told him that, this is how
Yeah.
we're
Well,
going to do
she
it. And I did this
said,
research and I did that research. And then they're like reeling, not just from the bomb that just dropped, but from the fact that you've been building this bomb for 6 months and they
right.
didn't know
And they
it.
feel behind the eight ball with the
That's right.
information.
Eggs, and
And
they
mhm,
feel scared, and then they feel like they need to,
yeah.
and that's when litigation can, start
Mhm.
up, right?
I talk to couples a lot too. I
Yeah,
talk to both parties a lot. And
right.
sometimes, even if I've talked to one initially, they'll say, can I bring my spouse? Can we have a second conversation? Absolutely. You both need to know what all of the information is so you can make the best decision for you and your family. 100%.
Yep.
If that's an option, great. If not, no problem.
Yeah.
Whatever's best.
Right. Yep. The other thing that, I know I have at least one client that the assumption is not going to be possible. The refi will be crazy expensive, right? Um, her husband would never qualify. So they're actually two properties. And he wouldn't, and so they'd have to refi both, buy each other out, do like a
Swap.
equity swap kind of thing.
Yep.
Um, and he would never qualify for the mortgage, and she actually might not either, because now she's self-employed, and that takes, you know,
Hmm.
um, you have to have, just I think it's 2 to 3 years of
2
provable
years.
income. How
Hmm.
many? Three?
2 years
Two.
on tax returns to 2 years of tax return income on as a self-employed client
Right.
for
So,
getting a mortgage.
right. So she, as a more recent self-employed person, she doesn't have that, right? So she was like, how are we going to do this,
Yeah.
without having to sell
Yeah.
both properties? Well,
Yeah.
they each are keeping one,
Yeah.
staying on the mortgages together,
Yep.
but they have a clause
Mm-hmm.
that says that if one person defaults,
Mm-hmm.
it has to go on the market even 1 month. It has to go
Mm-hmm.
on the market immediately.
And I would go further, Kate, and
Yeah.
offer a suggestion that I've seen couples do
Hmm.
where they put a couple of months of mortgage
They're
payments
doing that too.
in an
Yep.
account.
Yep.
And that way, and they stay and they monitor because if it's gone 30 days delinquent, you do not want a mortgage, a 30-day delinquency on your credit report. You can't come back from
Yes.
that very easily. So, making sure that everything is on auto pay,
Yep.
right? And if for
Yep.
some reason, the mortgage doesn't get paid, there's a fund of money that's
There's
there
an
to scoop
escrow
in.
account that
Right.
they're keeping for just that as well. Yeah.
Yeah,
Um, yeah, and I think it's, there are ways to work these things
for sure.
that are, if look, as we've talked about before, if you're on a mortgage and you're staying on a mortgage, you're in a long-term business relationship with this person that you're divorcing. That may be
Hmm.
fine for you. That may be really undesirable for you for a variety of
Hmm.
reasons. Um, but you should definitely have backup plans and stopgap measures just in case.
Yeah. I think it just when people don't write into their agreements the what ifs is where
Yes.
people get into trouble.
Yeah.
They have to think through the what ifs
And
and they
it's
have to just know
hard,
what they're
right?
signing up for. It's
Mm-hmm.
sometimes not as easy as what it looks like on paper. And talking to different professionals that can guide you to doing things like, hey, you don't want to have this go on for eternity.
Right.
But maybe maybe 3 years or 5 years if kids are going, getting out of high school or whatever, and you
Yep.
both are going to on different mortgages, that might be a great plan for that family,
That's right.
right?
Yeah.
Knowing that they're going to sell at that period of time or whatever they're going to do.
Or if you keep the house and, he's staying on the mortgage, one person staying, one person is leaving, but staying on the mortgage, you got to talk through like, well, who's responsible for repairs? How are
Hmm.
we,
Oh,
are we
yeah.
hiring them out? Who's paying for those? Like if I'm a renter, if I'm basically paying you rent,
Hmm.
or, who's responsible for the repairs
Yeah.
as they happen and who's responsible for deciding what repairs
Hmm.
are done and not done and necessary and not necessary?
Right. Like, oh,
Mm.
I want to remodel my kitchen. Well, guess what? That might not be covered under your little agreement. Or,
Right,
or
right.
I think we
Or,
can get more value out of the home. I don't
well,
know,
right. We're investing in it. So right.
Mhm.
Is this a person that you want to be in this long-term investment strategy with?
Right.
That's really, Tammy, I'm wondering if you have any sort of real-time examples of when an assumption did not work and whether
Yeah.
that was like a catastrophic, and what happened? How did people kind of recover from that?
Well, I have people come to me all the time that get denied from assumptions, right? Because all they heard when they called the mortgage company is my loan assumable? Yes, it is. Okay, thank you. And they hang up. And then they write it in their agreement. So, especially stay-at-home moms, sometimes they just want to keep the kids in the house and they just want to keep things the way that they are. And they don't understand that there's timelines that need to be met for support income.
Right.
Right. You shouldn't even apply for an assumption until you've received at least 6 months of receipt of the support, because that would be any mortgage guideline. So, in answer to your question, they come to me, they get denied by the assumption, and they panic because there is not a backup plan in their agreements, right? Isn't there wasn't written anything other than to sell. And then we have to take a really hard look. And I had a case um, probably last month where she ended up having to refinance the mortgage. But great news, we were able to refinance the mortgage. We were able to pay off a bunch of debt.
Mm,
And her father went on as a co-borrower for
yeah.
her.
Yeah.
So that is not, that can't happen with an assumption, right? So
Mhm.
we were able to get creative. Her monthly cash flow was so much better because we paid off some really big liabilities for her with the new mortgage.
Gotcha. Yeah.
And her dad went on as a co-borrower, as I said, and it's called a
Mhm.
non-occupying co-borrower. Her dad didn't live with her, but
Huh.
he went
Right.
on
Yeah.
as just supporting from an
But like a
income perspective
cosigner.
as a co-signer.
Yeah.
Exactly.
Right. Hmm.
And she was able to do it that way. So luckily it did end up working out for her. But I have seen where, things don't go that way and they end up having to sell. And when you think you're keeping it and then you're told it doesn't work out and you have to sell, that's probably more devastating.
I was gonna say, that's like compounded grief, right?
Yeah,
Especially
right.
when you're like, I fought for the house and I got it. Like, yeah,
Right.
okay, you got it from your attorney. You got it
Right.
legally, but you didn't
I
get it
I
yet.
think that
You
is
haven't gotten it
such
yet.
an important thing to say to your listeners is attorneys are not financial advisors. They're not mortgage lenders. All they're there to do is get you through the legal process. They're there to write up the agreements and make sure you're in agreement and that you're protected from the law. They are not there to give you guidance on financial information.
Exactly. They could literally write in there like that, X party is going to pay for the children to go to Harvard, but the children have not applied for nor
Right.
received acceptance to Harvard yet. It's the same thing,
Right.
right?
Right.
So
Carrying out the agreements and what's written on paper it's really important that those two things are in alignment, right?
yeah,
What you're agreeing to can be carried out.
right. Yep. Tammy, this has been such a I think, really important conversation, and I'm so glad you came back to have it.
Thank
Is
you.
there anything that you want to leave women with? Questions that they need to make sure that they're asking, or anything, or reframe about their decision making in this area before we go?
I think we've covered a lot today, and I thank you so much for having me because I do feel like the house can either is such a big emotional component to that, but trying to separate yourself from making a business decision and a future stability from your position, right? Being financially stable post-divorce
Yep.
should be the guiding force for you and really understanding what all of the options are so that you can make the best informed decision. If somebody isn't listening to you or if you're asking questions and they're not giving you the guidance, seek other professionals to help you because
Yeah.
I know a lot of times they think that their attorney can is going to know all the things, and they're relying on their attorney to know all the things, and that is not going to help you from your, post-divorce life.
Yeah. You need to call Tammy.
Thanks,
Tammy,
Kate.
where can everyone find you?
So, Take or Leave the House is my website. I did that because it was much easier than my name. So takeorleavethehouse.com, and you can schedule a free 15-minute consult with me. We can get some really good information knocked out in those minutes together, and then we can make a plan for next steps. So
Absolutely. Yep, that's free, guys. Free call with Tammy. Very important. Although I hesitate to stress that because Tammy's phone rings off the hook whenever she's on.
yeah. I love it. I love it. I'm so passionate, as I know you are too, Kate, with really giving the best information to people out
Mhm.
there. It's a very, murky, hard time to go through. And, it's so great that the kind of information like this is out there for people to listen to on their walks or while they're working out or whatever, wherever they are. I
Yeah.
find that that's just so great.
Yeah. Well,
So thanks for all you do.
I'm so grateful for you for, continuing to come back, and whenever you learn something new, or like come up on something, to let me know so that I we can bring it to listeners, because I think
Yeah,
it's really important
great.
stuff,
I
and
love it.
we all adore you here. So thanks so
Thank
much,
you.
Tammy.
Thanks so much.